What's going on, guys? Sir Lewis here. In today's video, I'm going to talk to you guys about why I don't DCA dollar cost average investing, or talk about it here on my channel. And I know there's a lot of influencers out there that talk about DCA. DCA is king, and nothing against them. Obviously, you're going to talk about what you believe, but in this channel, I'm going to talk about what I believe. So please approach this channel as open-minded as possible, because I'm going to talk about why I don't believe in DCA, and I think there's a better strategy which I do use, which you can profit more and earn a lot more versus DCA dollar cost averaging in the market. So let's start out with the first reason why I don't think DCA is good for a trader, let alone an investor. And the main reason is because you will not grow as an investor by DCA. What I mean by that is that you won't grow to understand market sentiment, where smart money is buying and smart money is selling to dumb money, and market cycles relating with macroeconomics. Now I know that's pretty complex, but the whole point of an investor is to understand and learn and grow during these times in the economy. But when you DCA, when you dollar cost average, and regardless of how the economy is, you're just buying every week, buying every month, you're not really taking the time to understand market sentiment and the best times to buy and sell, regardless if you're a trader. This applies to every type of investor: long-term, real estate, stocks, crypto. And let me just ask you guys one question. What popular feature do most investing apps out there, stocks and cryptos, feature? What do you guys think it is? That feature, the apps like Robinhood, Webull, Coinbase, Gemini, all these investing apps has this feature, and that is recurring buys, aka DCA on autopilot. And this just helps support my main argument here on understanding the market sentiment, because when you set up these recurring buys and your DCA on autopilot, you don't really care about the market. You don't take the time to understand how this is affecting this in the economy and how the market can come lower with rising inflation, and just put yourself in a position. If I were to DCA into ETH, from 5 months back, putting $100 every single day, how would have that worked out for you? Ethereum coming from its highs all the way to near $1,000. You would have been at a huge loss DCA to crypto stocks, versus understanding the market, macroeconomics, market cycles, smart money versus dumb money, and buying at the right times. And this is going to bring me to point number 2, which is something that a lot of people that preach DCA, not all of them, but many of them, love to demonize the strategy of buy the bottom, sell the top. But the main reason why they like to call this strategy out is because they put it to an extreme level. And what I mean by that is they say that it's literally impossible to buy the bottom and sell the top. And obviously buying 100% of your money at the bottom, at the exact bottom, and selling it all at the top, that's very difficult. But what if you catch 80% of the bottom? What if you catch 50% of the bottom? What if you catch 20% of the bottom? I guarantee you that person will be in more profit than someone who DCA'd coming down from the top and just investing a little bit near the bottom, versus that person that waited and invested with a lump sum amount near the bottom. And you guys can even Google this, DCA versus lump sum trading, on Google. Okay, it will tell you that lump sum trading outperforms DCA by over 70% or something like that, just simply by attempting to learn and to try and buy near the bottom. So please don't get intimidated when you're trying to buy the bottom and sell the top when people say it's impossible, because there's traders out there that make a living on this art. Okay, every single day. They love to put stats out there about 90% of traders fell, this and that. But what most people don't understand is that most people don't catch 100% of the bottom. They catch 80%, 50%, 20%, which is still a lot better than DCA in my opinion. And you can look this up on Google, like I said, lump sum investing versus dollar cost average investing. It's literally right on Google. So I don't really get why they say DCA is king when lump sum investing literally outperforms DCA. And just a little story about myself, I actually did this early 2022. I saw that the economy was not good, inflation was going up, we had war. I saw all these bad catalysts coming up, and I sold literally 95% of my crypto and even my Roth IRA. I moved most of my funds to safe government bonds, which literally barely move up and down. And during these last couple months, I saved so much money by doing this versus just letting it ride and just DCA as the market dumps. So now I have way more capital in my hands, and I'm waiting for good opportunities to buy a certain point of controls that I believe are good opportunities. But these decisions I make based on the overall macroeconomics, which in my opinion is king. Because if the overall macroeconomics is bad, crypto will be bad, stocks will be bad, real estate will be bad. And until we start to see a change in the economy, we will continue to go lower. So I hope you're still watching. I hope that you approach this video with an open mind, and I hope that I was able to change something in your mind and open you up to understand my style of trading and investing. And of course, you can research this with other channels that do preach this way of investing. And if you want to join my crypto trading community, Invest to Rest Club, where we focus on trading and also passive income with crypto, you guys can join that in the description below. You guys will be able to communicate with me and other traders in the Discord community. So thank you guys so much for watching. I'll catch you guys in the next video. Peace.